Just put that down, put this down here. I keep forgetting I should really send it from the next browser. Anyhow, that's a small thing. Okay. All right, so let me actually just back out of here a little, real quick. Oh, no, okay, no, forward. No, go forward. Right. So up one, right. Yeah, that was what I wanted to do. Oh, no, right. Where'd that come from now? What? That wasn't happening like time. Here's Cassidy. All right. Morning, Cassidy. How you doing? Good to have you on. All right. Yeah, cool. Thanks for asking. All right. So we're just taking a little browse of the syllabus to the section that we're currently going to be working. All right. Let me just let in Ariana. Hey, Ariana. Good morning. How you doing?
Morning, sir. How are you?
All right. I'm fine. Thanks for asking. Good to have you on today. All right. Let me see. Can I enlarge this? Oh, right. I could work with that. Okay. So obviously it's very small. I will zoom in. Describe the use. Okay. Yeah. There we are. That's the correct thing. Module 2. Nice. Right. Because one of the other girls, she messaged me this week saying that I had skipped out a set of stuff from the syllabus in process costing. And I was wondering if I wanted you all to do that on your own. And I was a little confused. I was like, what are you talking about? Well, I think like after she went through the PDFs and so I gave notes. I'm probably listening to the replays. Anyhow, right. So we did job costing and activity-based costing in January. We just wrapped up process costing. Today we're going to start marginal and absorption costing. Marginal costing is also called variable costing. All right. So we did job costing, like I said, as sections 2 to 5. We did ABC as the kind of follow-up to job costing. We just finished sections 8 and 9, process costing. Right, and then we have this application of costing systems to service industries. So I kind of do that straight from the past papers. And yeah, there are some difficulties associated with costing in the service sector. So we'll take that list and we'll check Google and check AI to see what else they could provide us with. All right, in terms of others. Right, so here we are. Right, so marginal or variable costing and absorption or full costing. Let me let in Elijah. Hey, Elijah. All right. Hey, morning, Elijah. How you doing? All right, good to have you on. Right, we're just taking a little browse. So we're going to start section 12 and 13 today. Right, so compare marginal or variable and absorption costing. So we have marginal costing techniques, absorption costing techniques. Now the funny thing is, you guys are already familiar with both of these things. Right? So absorption costing is basically what we use regularly, right? So when we did manufacturing accounts and we added up all the costs, so we had your prime costs consisting of all your direct costs, direct materials, direct labor, other direct costs for intellectual property and these things, and then your overheads were your indirect costs, and of course you had your adjustment for work in process. So those are all costs, right? Both fixed and variable. And that's the distinction that's going to become important in this particular section. So we are accustomed or we are familiar with absorption costing, even if we didn't know that that's what we are doing, right? And in marginal costing, now we actually did already meet marginal costing in module 1 to the tail end, right? And that was what I like to call the decision-making accounting, right? The make or buy decisions, the add or drop process, accept or reject special offer. The Honorable Keep Rowley official boy. Morning, Mr. Prime Minister. How are you? And thanks for liking the live. Yeah. Accept or reject special order and limiting factor, which it brought back on the syllabus a couple years ago. All right. So we saw in this particular section that when we are analyzing decisions, we actually need to ignore any costs that do not differ between the alternatives under consideration. And in the majority of the situations, the fixed costs were the costs that were ignored. Now, it's not to say that that's going to happen 100% of the time in the decision-making part of it, because the primary thing that you have to remember is if the costs don't differ, then yes. If they stay the same, they don't differ, we ignore them because it literally will make no difference if you include them or not. The final answer will be the same. All right. Now, if there are some fixed costs which can be avoided, like if you shut down a particular production department and some fixed costs are saved, well, obviously that If you shut it down, the fixed costs don't happen. If you keep it, the fixed costs do. So therefore, that will be a cost that will differ between alternatives. So it comes back to the primary, basic, and fundamental aspect of, does this cost differ between the alternatives? Sorry, one sec. I forgot to drink my hot tea this morning. Right. So I might run upstairs for that because I don't want to keep doing that and disturbing the class. Yeah, anyhow. So today now, what we're going to be talking about is basically what we're going to have to do is we're going to have to calculate the cost per unit under absorption and variable costing. As the name implies, variable costing takes into consideration only variable costs per unit when costing units for the purpose of decision making. And I'm going to give notes on all of this, right? And and they treat fixed costs like how we treat non-manufacturing costs. We treat them like period costs. Remember, very early on in Module 1 when we did manufacturing, even before that, classifications of costs, we met this distinction, between product costs and period costs. Product costs are the costs to make the product, all manufacturing production costs, product costs, direct materials, direct labor, overheads, etc. Anything that can be linked to the manufacturing aspect of the operation. And then we have all the other costs that are not linked to the manufacturing aspect. Well, when I say not linked, like you have your selling and your distribution, you have your admin, you have your HR costs, your finance, all that kind of stuff. So those things that are not part and parcel of your manufacturing aspect, those things are called period costs. They're simply the costs you incur in the course of the period, long story short. All right. So we are going to look at how to calculate the cost per unit under these two different costing methods. Oh, let me let in Joshua 1 second. Oh, where did my cursor go? It keeps disappearing. All right. Hey, morning, Joshua. How are you doing? Good to have you on. Right. So I'll have to check a couple of people after class just to make sure that they're still checking the replays. Anyhow, yeah, Joshua, we're just talking through what we're going to do today, so you didn't miss anything new. All right. Right. So, like I was saying, and then after that, we have to do the marginal costing and absorption costing income statements. We'll start with the absorption costing today, right? And then we have to reconcile the net incomes, basically explain why they differ. So it's similar in concept to a bank reconciliation statement in that you're going to have two different net incomes, and you might be wondering, well, how are we going to have two different net incomes? Which one is the correct one? And one is correct for the purpose of decision making, and one is correct for the purpose of financial reporting. All right, being the variable costing for decision making and absorption costing for financial reporting. All right. Now, I see in this section 14, assess the impact of technology on cost and management accounting. I don't really have any notes on that. I never did that. I'll take a look at a couple of texts to see if they have anything there. I'll check Google and I'll ask the various AI entities out there what they can conjure up, and I'll take a look and probably send that to you guys in an email or a PDF on WhatsApp. All right. Okay. Let me just double check my rule. Okay. So Julia, Jonika, and the other Joshua might pop in. I'm not sure about Amara and Shekinah. Like I said, I think I have to message them after and make sure they're still watching the replays. Okay. Right. So with all that said, let's get into some notes. And let me just check something here real quick. All right. Okay, cool. No problem. That's fine. Right. Where was I? There was I. Cool. Right. So pull that up there. Pull that up here. Have my reference notes. Okay. So of course that's a little too small. So let's zoom in there. Zoom out a little bit. Right. So we have absorption or total costing versus variable or marginal costing. Right. So I did mention that in 2022 when I taught this topic, and I do actually very much like this topic for whatever reason, whether it's the different variations in the income statement or the calculations involved with the reconciliation. So something about it, I just like it. The next topic too that we're going to do, which is the first topic in Module 3, which is break-even analysis, or CVP, cost, volume, profit analysis. It's a bit more math-based, so I do very much like it. But I try to contain my joy because I know I could go a bit overboard. So yeah, right. So without further ado, let's get into some of the notes, right? Oh, sorry, no, the point that I was saying, so we're gonna spend today, which is could you come up? Yeah, the 15th, the 22nd, and I'm hoping the first on this topic. I know my head kind of, yeah. So, and again, I know the first is Carnival Saturday in Trinidad, so I know some of y'all, y'all fat in these things, right? Which I used to do in my younger days. Well, kill me that I would not be fetting if I didn't have kids. Anyhow, yeah. So we could discuss this day, right? Again, worst case scenario, maybe the day before I could do a recording and send it to y'all if it is that we decide not to have class, so y'all could watch it on your own time. But yeah, if you guys tell me you're gonna be here that Saturday morning, I'll be here as far as I know. Yeah, my usual mass playing buddy not coming in because well, you played last year when I didn't play, and you're like, nah, I get. And then the other friends who normally plays it not playing either, so you don't feel like being the only old veteran on the road. Yeah. Anyhow, with all that said, let's get into some notes, right? So, like I said, these are two costing. You could say I don't know if techniques are the right word. I think maybe approaches to costing that we use, like I said, for different purposes. One, which is absorption costing, we use for financial reporting, right? So absorption costing is used when you're doing a PK income statement. Things in the balance sheet will be costed using absorption or total costing, right? Whereas variable or marginal costing is used for decision making. And again, the primary thing in decision making is that when we're analyzing different paths, we need to really analyze the differences between those paths, as I was talking about earlier, right? So like I said, under absorption costing, right? All production costs, both fixed and variable, are attached to under absorption costing, all production costs, both fixed and variable, are attached to finished units of output, right, in order to calculate the unit cost of production. The unit cost of production, meaning the cost per unit, right? Right, and like I said, that's basically what we've been doing all the time. That's how we operate, right? We didn't really know that there was another way to operate, right? However, under variable costing, right, only variable. Whoa! How am I not back up there? Yeah, I have no idea. Only variable production costs are attached to units of output. Sorry, that's Julia. All right. Hey, good morning, Julia. How are you doing? Good to see you on today. All right. Don't worry, didn't miss too much. Yeah, morning. Yeah, we didn't miss too much. We just had some preliminary discussions about what we're gonna do, how we're gonna approach it. I'm just started the notes, so you haven't missed too much. So we're doing absorption versus marginal costing. All right. So these are all the notes I have so far. So just so everybody knows, right? So there's just kind of one page. When I say one page, this box is this is the only notes you're gonna have for today, and the rest of today is gonna be calculations. Oh, I forgot to send the PDFs. Anyway, I'll send the PDFs when I finish the notes, and of course I'll pull everything up on the screen so everything is visible that you'll need to be able to do the questions, right? Right. So under I may need to take a 5 minutes to get that tea. All right. Hey, Jarrell. Morning. How you doing? Yeah. So, under variable costing, however, only variable production costs are attached to units of output, whereas fixed production costs are treated as period costs and are subtracted, right, in total in the expense section of the variable costing income statement. You know, I keep telling myself I'm supposed to hook up our next mic do the dictation thing so that I don't spend much time typing. But I mean, that might move a little too quickly. And I know some of you like to write notes, as I do. I'm not criticizing writing notes. I think writing is very powerful for absorbing and understanding. All right, and I wish I could get back to making notes on the stuff that get back to learning. Anyhow, right. So we have two approaches to costing here for decision. Well, one for decision making, one for reporting. Right. So the one with which we should be accustomed is the absorption costing. Right. We've been using it basically all the time, except for that decision making analysis section to the end of module 1, and this new costing here, which is variable costing, is like a kind of revisit to that decision making approach where we analyze the costs that differ between alternatives, which in this case are really variable costs. All right. So the major issue in terms of the difference in net income under these two methods is sorry, bullet points. All right, is the attachment of fixed production costs to units of inventory under absorption costing, which ultimately, hey Chris, how you doing? Ultimately end up inventoried on the balance sheet, whereas under variable costing, all fixed production costs are deducted in the period in which they are incurred. I.E, in essence, they are treated as period costs. Right? Non-manufacturing. This different treatment of the fixed production overheads is what causes the net incomes calculated under each of these methods to differ. Right? A reconciliation statement is prepared to explain the difference between the net incomes. Okay, cool. Yeah. Right, so that's the long and short of it. That's all the notes for today. Well, I believe I took a look and that's all I saw. So I'm gonna send this in the chat as well. And if you guys are messaging me on WhatsApp and I'm not responding to you right away or at all, is because something is going on with my WhatsApp. Like my wife, was it Wednesday or Thursday? She was messaging me, and because she was in the bed taking a nap with the 3-month-old, and he had woken up and she was asking me to come take him so she could sleep a little longer, whatever the case was, to come change him. And my phone was right next to me, and the messages were not coming through. My notifications weren't going off, so I checked just in case because my 2-year-old sometimes plays with my phone before he falls asleep and does all sorts of things. I have no clue if he spent any money. And I thought maybe he turned on Do Not Disturb, but it wasn't on. So it's only when I opened WhatsApp, the messages started and opened her message, that her messages, her chat, that her messages started pouring in. So like, this is weird. And it was continuing up to yesterday. So I keep checking my WhatsApp. I mean, I know how to get a new phone, so that's anyhow, right. So basically what we're going to see today is we're going to see these methods in action, right? So I need to actually open up my PDF. So sorry, give me 1 sec. Let me go back there. Yes, Keisha, what's up?
And you know, you had a part of something called inventory. Check back. It was there, but it's gone from here.
Inventoried?
Right. Yes. Company above the attachment of fixed production cost to the units of that is supposed to be inventory.
Yes, sorry. Thank you, yes. Inventory, boy. Whereas, right. Thank you. Right. Okay, maybe I should send over the picture then. All right, I think we could forgive that little one, right? Okay, PDFs, notes and examples from text, review questions from text. Right, so I think it's review questions from text. Right, yeah, Milsap, Diablo. Right, who are we doing first? Harris. Oh, right, no, so Harris is the notes. Oh, where did it go now? Notes from text. Right, so I'll send you guys this PDF as well, right? So let's just take a little look at Harris, right? So we have the records obtained from Harris for the year ended 19x4. So I know some of you are like, 19, boy, what's going on there? Hey, Gerald, thanks very much. Right, so we have sales, 9,500 units at $9 each. We have selling and admin costs. We have 5,000 fixed. We have variable, 220 per unit. We have variable production cost per unit. So we have direct materials 120, we have direct labor 130, and we have factory overhead, sorry, 50 cents. That's variable, right? So we have a total cost there of $3, and then we have fixed factory overheads $10,000, and production is 10,000 units. So what they've given us here is like a kind of bit of a breakdown of the costs for Harris, right? So what I'm gonna do is, yeah, no, I'll come back to that piece because that's the word inventoried. So I was supposed to kind of explain that word inventory, but basically all it means is that the fixed costs end up as part of your closing inventory on the balance sheet. So the costs that end up on the balance sheet as part of your closing inventory are said to be inventoried. So we're inventorying costs. We're putting costs on the balance sheet via the inventory. So we see the costs are inventory there. All right. Okay, cool. We're going to put this on top here. I'm going to pull up my little thing here, go there, and then I am going to zoom in. Let's zoom out a little bit. Right, so what I'm going to do here is show you how to calculate the cost per unit under variable and absorption costing. Now, the cost per unit is the production or manufacturing cost per unit. So the selling and admin costs do not form part of this calculation. I'll say that again. When you are calculating your variable cost per unit, right? Even though it says variable cost and we're talking about variable costing, selling and admin costs, any non-manufacturing costs do not form part of your variable cost per unit. Hi, Julia. What's up? Yeah, so you could use that as the information, or you might even see that information on the cost card. That is true, right? It depends on the format or structure of the cost card. All right, so it could look like this. It could look more complicated. It could look simpler, right? But yes, it's very similar to that. That's a good point, right? So I mean, we know our components, of course. We have direct materials, we have direct labor, and we have overhead. And as you can see here, they have separated the overhead into variable, factory overhead, and fixed factory overhead. Right. So under variable costing, we're only going to use the variable cost. So you'll see the 1.2, 1.3, and the 0.5. So your total production cost per unit, or the variable production cost per unit, is $3. Under absorption costing, you will have the same direct materials, direct labor, and variable factory overhead, but your fixed factory overhead. So we need to find the fixed factory overhead per unit. So if you take your fixed factory overhead of 10,000 and divide by the number of units produced, 10,000, you'll get 1, right? So we could 10,000 and you get 1. So the absorption cost per unit is $4, right? So as you can see, the only difference between the variable and absorption costing per unit is the treatment of the fixed factory overhead. Under variable costing, we do not include it. It is treated as we said, like a period cost. It doesn't differ between the alternatives or the decisions being made, so we do not include it as part of your decision-making costing structure. Well, yeah, that's not the best phrasing, but we don't include it in cost per unit, right? Under absorption costing, however, we do, because again, absorption costing is traditional costing, full costing, and it is not abandoned, right? It is a sound and logical costing method, and we need to remember how to do it. Oh, here's Joshua. Hey, morning, Joshua. How you doing?
Good morning, Chris. Not too bad. How are you?
All right, I'm fine. Good to have you on. So today we started talking about variable versus absorption costing, right? So we had this one little section of notes across here, right? So this is a costing. So this is costing that is used to help make decisions, primarily the variable costing method. Absorption costing is what we're accustomed to, where all costs are attached, all relevant costs are attached to units of output, both fixed and variable. Whereas under variable costing, we only attach in variable costs, right? So this is just the first example we did. Didn't miss much, right? So we took from this section right here, the variable costs per unit, right? And we added those up, right? And please notice variable production costs. We do have variable selling and admin, but those aren't attached to our units of output for the purpose of costing, all right? Right. And then under absorption costing, which is, like I said, the traditional or full costing, we attach both the variable and the fixed costs to units of output to cost them, right? And so that's basically what we did so far, all right? So you didn't miss too much. Okay, lovely.
Okay, no problem. Thank you.
All right, no problems. Let me just make sure I put that you are here. All right, I'm not seeing Junika and Amara. All right, so hopefully they pop in soon. All right, cool. All right, so, what? Hold on, what is that? Okay, that's interesting. Sorry, yeah. Right. So, oh, yeah, sorry. So the quick question is, can I get a G in the chat if you guys are good with that? If you need me to re-explain, just kindly give me an R, and I will happily do so. All right, so I have 9 out of 14. The next 5, you'll let me know in a couple of seconds, right? So I sent out in the chat, right? So what I want to do is I want to pull up Milsap, right? So Milsap was the question that I'm going to give you guys a try. Right. Okay. Cool. Oh yeah, and I did say I would send this in your the WhatsApp chat. So let me do that quickly. Document. All right. So what I'll do, I'll send two things. Right. I will send the PDF with Harris with the notes and examples, so that you guys can have it and read through if you feel so inclined. All right. And that's from my old textbook from UE. Right, okay, so there's these two things I want to send, right? Right, so yeah, so there are two PDFs. One is notes and examples, so that's where I took Harris from. And the second one is the one we're going to be working from, well, for the rest of today, I believe, which is the variable and absorption costing review questions from text PDF. All right, so if you feel so inclined, you can open that in your own PDF reader. All right, so okay, so E2630, so variable and absorption cost, inventory costing. So Milsap Industries began business on Jan 1 of the current year, manufacturing and selling a single product. Consider the data that follow. All right, so let me zoom out a little bit. See, like 150, right, okay. Right, so yeah, this is actually the relevant information. So we have three columns: units, variable cost per unit, and fixed costs, right? So we have production volume 80,000 units, sales volume 72,000. Now I know it looks like a dot, like a decimal place there, but I guarantee you it's not 72.000, it's 72,000. That's a little typo on their part. Right? And I added in the $20 per unit because we're going to come to that a bit later when we do the absorption costing income statement. All right, now they kindly gave us the variable cost per unit. Direct materials is $1.30. Direct labor is $2.80. Factory overhead, again, variable is $4.40, and selling expenses 20 cents. So they include that because they want us to do the income statement eventually, and that will form part of the income statement because it is an expense. Right? Now we also have a column for fixed costs. Factory overhead is $540,000. That's fixed factory overhead, and fixed selling expenses totals to $180,000. Now, what do they want us to do? They want us to compute the cost of the company's ending inventory by using variable costing, and compute the cost of the company's ending inventory by using absorption costing. Right? Now, they also have some other stuff there. Don't worry about that. But we will be doing the income statement later. Right, so what I basically want you to do is exactly what I have here. Right, you're going to head up Milsap Corporation, calculation of cost per unit, one column for variable, one column for absorption. You're going to do the dollars per unit, and you're going to basically put it in the same order. As you can see, it's direct materials, direct labor, variable factory overhead, and fixed factory overhead. Right, now, again, if you guys have done this in school already and you have your own format to which you are accustomed and you prefer to use that because this is confusing, then by all means do what you know how to do, provided you know how to do it and that you can use it well, right? And of course, feel free to send me pics of your work as you go along just to make sure that, hey, am I going right here, etc., right? Right, so yeah, so that's what you're doing. So basically, it's like a carbon copy of this. For the variable costing, they give you exactly what you need. Again, you're ignoring the selling expenses because that is not part of the production cost per unit. That's a period cost and it's not attached to units of output for the purpose of inventorying, right? Right. Yeah. So you're doing one column for variable and one column for absorption. Now for the absorption, just like I did in the Harris Corporation example, you're going to take the fixed costs and divide by the number of units produced, not sold, produced. All right. Okay, cool. While you're all doing that, I'm just going to run upstairs to get a couple bottles of water and come back. By the time I come back, you all should be okay with that. If not, you'll let me know. I'll give you a couple more minutes. Excuse. All right, again, come back. Okay. That was a little quick on my thought. And I think I did the wrong thing. I think I took cold water from the fridge and I should have taken from the cupboard that wasn't cold. Kimishara or Kimishara, I'm not sure. Right, so some water go in. Oh, let's check if anybody commented on the side. No, okay, yeah, I do on the Russia side. So it's a good thing. It's a good thing. Zandoli boy, that's a big name. Zandoli 6. All right. Hey Casper, hey, thanks for the follow. Boy, I think 2 weeks ago across the 5,000 mark, and then in those 2 weeks across 5,200, so it's like 100 a week. It's pretty cool. Wait, thanks for sharing, Jada. Is it Sego or Salo? Right. So that's there. This will go home to Mr. Shiloh Manon. Sorry. Where's my stapler? There's my stapler. Cool. All right. Let's take a swing. All right. Let me zoom out a little bit. Oh, no, that's not what I meant to do at all. Zoom out, not in. All right, cool. Okay, so Milsap, right? Calculation of cost per unit, variable. Okay, so right, so we have the same components, right? So direct materials, direct labor, variable overhead, factory overhead, yeah. And then fixed factory overhead. So here in a small child has my niece outside there. They're having a little family get together, so she helping to clean. Right, so direct materials and the variable cost there is 1.3, direct labor is 2.8, factory overhead is 4.4, and we don't consider fixed factory overhead under variable costing, so that's the end of all this. The total is 850. All right. Under absorption costing, we have the same direct materials, direct labor, variable factory overhead, right? Oh, thank you, Sash. Appreciate the follow. And for the fixed factory overhead, we have 540,000 to make 80 units. So what we'll do is we'll take that 540 and divide it by the 80,000. Oh, that's 1 0 too many. Hey Kevin, morning, how you doing? Right. So now when we add up those things, we get $15.25. And this is the production cost per unit. Sorry, one sec. No, that was that? Yeah, sorry. Yeah, production cost per unit. All right. Okay. So like I said, we start in simple. Okay. All right. So ladies and gents, if you guys are good with the calculations thus far, kind of give me a G in the chat for this particular one here, which is Milsap. If you need me to re-explain anything. Sorry, yeah, go ahead. Already fixed factory overhead, no problem. Right, so what I did is I took the factory overhead, the fixed, sorry, I'm trying to highlight this. All right, yeah, the 540, and I divided by the production volume of 80,000. So 540 divided by 80, right? So it's coming, right? So if you have 540,000, 80,000, and then we have divide, where's the quotient? Quotient, right? Numerator is that, denominator is that, put it up, and we get 6, huh? Bar. So why is it giving me that? Okay, so let's try it again. So 540 divided by this is 675. There you go. Okay, I guess I have to explore that quotient. This is the fixed factory overhead, and this is the production.
Chris, I think the quotient function just gives you the how many times you put into it.
Yeah, so this like
Round it down.
the whole number. Okay. Yeah. All right. Cool. Thank you. Yeah. I never really used it before, so I just thought it would do like a strict divide, but you'll find new things going on in Excel that you never expected. I still want to explore some of those spillover functions and all kind of thing, but I just really have scope for them right now. So, you know. But yeah, I was a bit of an Excel junkie at a point in time. All right. So Elijah, 3, 4, 5, 6, 7. All right. So that's 7 out of 14. So half of y'all responded, half of y'all not. So I'm not not sure exactly what that means. But if it is you're having trouble, let me know. Again, you could WhatsApp me direct with my phone. Oh, my pocket. Ooh, wow. Old man moment there, boy. I was like, anybody ever try this? I'm like, where my glasses? You may see my glasses? I'm like, oh, all right, yeah. Yeah. Anyhow. So yeah. Right. So we have the cost per unit and the variable and absorption costing. Okay. So we're going again, and we're going to do, after Milsap, we have Diablo. Right. So Diablo Systems manufactures a specialized video adapter. Hold on, just now wait. Sorry, one sec. I want to check something in the chat real quick. Okay, right. So I want to send this information here. Hold on, wait. Crop that on that side too. Yeah, and then down here now. Right, so that's Milsap. Send the solution. Right, okay, cool. So now we're going to go down to Diablo. Right, so Diablo Systems manufactures a specialized video adapter that has a selling price of $79 per unit. Right, well, yeah, this was near the center of the book, so it didn't scan properly, so I had to insert those. All right, so during 1996, the first year of sale, production and sales totaled 40,000 units and 37,000 units respectively. So the first year of sale, this is an important piece here because it implies that since it's year one, you have no opening stock, right? You now start, and therefore you're now going to commence production, so you're going to have no opening stock of finished goods, I should say. All right? It's also possible you have no opening stock of anything. You just started, and now you're going to purchase all your stock to start your production. So production total 40,000 and sales total 37. So that should tell us, hey, I made 40,000, but I only sold 37, which means I have 3,000 units left as my closing inventory or inventory of finished goods. Now, it says here, following information has been gathered from the accounting record. So variable costs per unit, we have manufacturing, selling and admin. Then we have fixed costs in total, right? 1.2 million and 207,200. So they want the operating income. So basically they want the income statement. But what we are going to do is we are going to calculate the cost per unit under both variable costing and absorption costing, right? So actually no, we won't. Oh, sorry, it wouldn't be variable costing because you already have variable costing. They gave us $18, right? So there's nothing else to find there. And once again, selling and admin is not part of your product cost, so we don't add those two together to find the cost, the production cost per unit, right? We do need to include it in the income statement, but that's the income statement part of it, right? All right. So what you're gonna do here for me is you're gonna find you're gonna have the variable, variable costs. So I want you to find the fixed costs per unit, right? So I'm gonna give you a couple minutes. So again, as we should know, right, we're gonna take what the fixed cost from here, and we need to find the number of units produced, which they told us on top of here, right, which is 40,000. Okay, all right, cool. So let me send this in the chat real quick. You'll do those up for me real quick, and then we're gonna start doing some income statements, right? So yeah, I know this part of it could get real boring real fast. Hey, I was to tell you guys. So when my teacher came last week, remember last week we had a process costing past paper question that we said clearly had an issue because they didn't give us the information that we would normally require to do a full production cost worksheet. So the thing is, they didn't ask for that. They asked for certain pieces of it, but you would have basically had to do like excerpts of your process cost and worksheet, your production cost report, in order to answer the question anyway. So I gave him a copy and he said he'd take a look at it. And then he messaged me later and he said, yeah, this question was the information given. It wasn't wrong, but remember we had two different units for work in process for the materials and for conversion, as in the physical units. He said, yeah, that's wrong. You can't have two different sets of units for that, right? As in physical units. And then he looked at the replay and looked at how I did it. And he said, yeah, it was an approach similar to a next fellow called Sylvan something Sylvan, who actually also has a YouTube channel. So there's somebody from back in his day. And he said, just do the question with the error in it. Like, oh, okay, cool. So yeah, so that was a problem with the question. And the general rule of thumb, he says, is that once in the marking, at the marking table, when they used to have a physical marking table, they acknowledge, hey, there's an error in the question. So again, the options are they scrap the question entirely, or that part of the question, and any related parts that needed the input from that part. They scrap the question, they correct as is, which is, I guess, the more technically difficult one to do because different people could have different interpretations of what to do, and they rather something uniform than not uniform. Give everybody the full marks for that question or related parts, just to kind of even things out, right? So yeah, those are the options. So if you are in the exam and you realize, hey, this has an error, which again, you shouldn't have to make that call, because one, you're technically not qualified to do so, although it's not beyond you. Right? But like I was telling my Form 5 class this week, a maths class, we were doing, we did the January 2025 paper the previous week, and there was an error in question 1 on that paper, 1 part B. And I'm like, this is ridiculous. How does this slip past? You know? Anyhow, but I told them, I said, look, if anything given in trouble, leave it and come back, yeah? And the thing is, it's only a 1 mark question. So like, look, 1 mark in question 10 is the same as 1 mark in question 5, same as 1 mark in question 6, etc. Get the marks wherever you could get them. And you don't have to do the questions in order, you can jump around the paper. The risk with that is you're going to miss out something unless you check back over thoroughly and properly. Anyhow, right, so the variable cost, $18 per unit, right? The fixed costs, right, so we said that we have 1.2 million, right, and we are going to divide that by the number of units produced. All right, so 1.2 million divided by 40,000. All right, so that would knock that out at 30. Right, so the production cost per unit, oh, what happened there? Okay, yeah, it's $48 per unit. Right, okay, cool. So I'm hoping you guys got that. So if you need me to rework it, if you didn't get it, give me an R. If you got it and you're good, you could hold the G, right? Hold the G for now. I just want to know if anybody had any issues, all right? And what we're going to start right after we clear off any issues anybody may be having is we are going to start the income statements. Oh, I got some G's. Okay, cool, no problem. All right, thank you. All right, now 1 sec. Oh yes, wow. Something about this chair gives me a good angle to get a crack in the right place there, boy, in our lower back. Ooh. Oh, yes. Okay. All right, 1 sec. I'm going to just check to see if my dear wife messaged me. Oh, I got a picture from one of yours. Since 10:40. So you see what I'm saying? Cool. Let me just check this real quick. Yeah, brilliant. Lovely. Good job. Yeah, sorry for now checking it. Again, like I said, my phone gave me a little bit of trouble, so. Right. Okay. So we're going to go back to Harris. Right. So Harris, right? What we want to be able to do is to do an income statement under absorption costing, under variable costing, under usual circumstances, where we have either opening stock, closing stock, or both of finished goods, right? The net incomes will differ, and I'll elaborate as to why in a little bit. Okay. If there are no opening or closing stocks and all units were sold, then the net incomes will be the same, right? So it's only where we have the presence of opening or closing stocks will the net incomes differ. But we still have to be able to get to the net income in the first place. So that's what I'm going to do. And we're going to start with, what it name? This is Harris, right? So I'm going to start with Harris. That's still very small. I don't know. Maybe I could do a left and right split. Hold on, give me one sec. All right, so Harris Corporation income statement under absorption costing, right? They did give us a year, but sorry, a year. So it's only the income statement that we would use selling costs. A year, yes. Yeah, in the income statement, that's correct. Yeah, okay, cool. Right, Harris Corporation income statement, absorption costing, right, for the year ended 31 December 19X4. Okay, so you start off as per usual. So this is going to be a little bit of a revision for those who may be a bit out of touch with income statement. So as we know, the first item is supposed to be our sales revenue, right? So sales, right, revenue. Or you could just put sales. So how many? So we sold 9,500 at $9, right? So 9,500 units at $9 each. All right, so 9,500 by 9 is 85.5. All right, we have to minus the cost of sales, right? So whether you prefer cost of sales or cost of goods sold, they both mean the same thing. They're both synonymous, interchangeable, whichever one you prefer. All right, now, okay, cool. So in the question, we have nothing about opening inventory, but I'm going to put it in as a placeholder, right? So, or inventory at start, right? We have none, so we're just going to put a 0, right? So normally, if we do have that item, we leave it out. But because in other questions, we are going to have an opening inventory, I want to have the format kind of consistent, right? Now, just a word here. In 2022, when I taught this topic, I tried to teach both this income statement and the variable on the same day and the reconciliation. And I realized I lost everyone and I had to start over from scratch the next day. The last time I taught it, I also, now, as you all know, and I say many times, there's no one right or correct format that you have to use for almost anything in Unit 2, right? And I start with this format because it is usually the most familiar to people because it's the opening stock plus purchases. There's no carriage in, there's no returns out to worry about, but you're minus in your closing stock. So that's the usual thing to which we're accustomed. So I start where we are accustomed. And then last year I offered, I'm seeing it here in my notes, 2 alternatives, which I actually prefer, right? And I realized the same thing happened. I lost people because I was given too much information at once. So what I'm going to do is I'm going to stick with this initial format for this question and the next 2 being, it was Milsap and Diablo. When we do those 2, I'm then going to track back and show you all the alternatives, right? And if you'll want to use them, cool. If not, well, you'll let me know. But I like to use them because I find it's way quicker. All right, so we'll get to it. But I'm just giving you a bit of a warning, I guess you could say. All right, okay, right. And also, if it is you find yourself getting lost anywhere, don't feel a how because it happened the last 2 years. So I am probably the problem. All right. So let's see if we could try and address that. All right. So add production costs. So as we know, normally is opening stock plus purchases, but we are a manufacturing entity. And because we are a manufacturing entity, we're not purchasing finished goods. We are producing them. And that was the whole purpose of the manufacturing account back in Module 1. to find the cost of production, which we use to replace the purchases figure that would normally go in the income statement. Okay? So production cost, right? So we produced 10,000 units. So 10,000 units. And the production cost under absorption cost, then we're going to go back to our example here, is $4. So that's what we're going to put here for each. Cool. Actually, hold on. What is it at? It's at 40 already? Wow, okay, so maybe just do 50 and call it George. So I have enough room there. I don't like it too wide because then the numbers seem too far away. All right, so all we do here is you multiply 10,000 by 4, right? You add those together, right? And this will give you the cost of goods available for sale. Now, this line is purely optional. We do not need to show a subtotal for the cost of goods available all the time. All right, you could actually leave it out and go straight to the next line, which is less inventory at end. All right, now if you remember, we made 10,000 units and we sold 9,500. So given that, right, if we made 10,000 units and we sold 9,500, the difference of 500 is how many units remain unsold, right? And that's at a cost of $4 each, right? So that's equal to 500 by 4. So we have 2,000, right? So now the cost of sales, right, is equal to 40 minus the 2, which is 38,000. All right. And now to find the gross profit, all we do is we take the 38 from the 85.5, right? Now we're not done, right? I'm going to pause there for a couple of seconds just to kind of let you kind of see what I've done so far. I'm going to recap it. And then we just have a couple more lines because we have to deal with the selling and admin. And this is what I was saying, right? The selling and admin will go in the income statement. They're not just there for show, right? They're not just there to be extra items we have to learn to ignore. No, they actually will go in the income statement, all right? Okay, let's get some water real quick. Yes, Keisha, talk to me. What's up? You had a question? Or was that an accident?
First, I was telling you,
Uh-huh.
if you just know, I was wondering, when you put the brackets, why normally doing a custom when you put brackets, that means to subtract. So I get distracted right there.
Okay.
I see we're back to 40.
Oh, sorry, no, that's just a little artifact, a remnant of the format of the sheet itself. So, hold on, let me see if I could, right, 1 sec. And Haley, I see you have your hand up. How I get the $4? Oh, right, that was back here. Yeah, right, so hold on, just now. I have a few questions to tackle. 1 second. All right, so Cassie, that's how I got the 4. That was the example. And then I seen Haley saying, Sue. Yeah, Haley, talk to me, what's up?
Sir, can you go back to the previous slide that you've been doing just now?
This one?
Sorry about that. So in my school, we tend to do it like this, and there wasn't like a solid format for it either.
Yeah, no, yeah, don't worry. I'm gonna show. Sorry, go ahead.
Yeah, we just can I send you a picture of it after class?
Yeah, well, I'm actually gonna show a couple other formats in a little bit. So you'll let me know if it was one of them, right? But yeah, you could send me the picture. That's no problem. Right. So that was Haley, right? Cassidy, did I answer your question?
Yes.
All right, cool. And Keisha, are you okay now with where the brackets are? All right, cool. All right, lovely. Yeah. So just like Haley was saying, different schools, different teachers like different formats, right? So I started with this one because, like I said, it's the most familiar for most people for an income statement. But there is a much shorter one, which I could actually show you right after this. And again, I'm just trying to be careful with how much information I give at once, because I know we do have new elements, which is the absorption costing logic. So I don't want to overshow stuff, right? But I do have a couple of things to add here. So just give me a minute. Right. So now we have to minus the selling and administrative expenses, right? So we have the fixed one, which is $5,000. So fixed, right? So 5. And the variable. Now the variable is $2.20 per unit, right? So $2.20 per unit. Sorry, $2.20 each. Now it says selling expenses. So you might be wondering, well, how many units? Is it the 10,000? No, because we didn't sell 10,000. We sold 9,500, right? So 9,500 units at $2.20 each. So 9,500 by 2.2, right? So that's 20,009. Sorry, hold on 1 second. Early on morning. Right. I in a class right now. But Simone home. So what you could do, you could give her a call. Yeah. Yeah. Well, the nanny there too, so she have assistant. So yeah, give her a call now. If you don't get through, come back. I'll see if I can get her. Yeah. Okay, cool. Yeah, man. Later. Yeah, sorry guys. They're just organizing some stuff for the kids. Right. Okay, so let me actually maximize this now. So we can get a better look, and of course I'll zoom in. Right. So this is the absorption costing income statement for Harris. Now this is, like I said, one version. I am going to show you a second, much shorter way that actually kind of puts this whole section in one line, which to me makes a lot more sense time-wise, right? But again, I know some people prefer to see things a particular way. All right, and there's an even shorter version to that. All right, which is the same mistake I made last year, because when I did that, everybody said they got confused. So we'll see. All right, okay. So once again, you start off with your sales revenue, and you have to minus your cost of sales, right? So again, if you like this version, which is basically a throwback to original income statements, so you have your inventory at start, plus not your purchases, but your production costs, and then minus your inventory at end, giving you cost of sales. That's fine. You can use this version. Nothing is wrong with it. It's not inferior in any way, right? So you take your sales revenue and you minus your cost of sales, right? And you get your gross profit. From your gross profit, you minus any selling and admin expenses. And just be sure that if you have variable selling expenses, and it's on a per unit basis, you multiply it by the number of units sold. All right, so what I'm going to do is I'm going to send this as a pic in the chart. Hold on, did I go back? Oh, no, all right, so actually I have to resend. No, oh, where you going? Harris. Okay, cool. Okay, so, all right. What I will do is I will show you all the alternative versions, right? And again, I just, as a disclaimer, you don't have to know all three. Pick one, right? I mean, if you happen to remember all three, great, no problem, right? So again, I'm just going to show you in passing. I'll send pics, I'll send everything in the PDF after class. But when you guys get a question to do, actually, hold on. Just now. Okay, you know what? I'm gonna give you guys one to try, and then we're gonna do it in this format, and then we're gonna backtrack, and I'll show you the alternative formats. Actually, you know what? Let me let you all vote, right? If you want to practice this question now, practice this format, give me a P. If you want to see the other formats, give me an O. Right? So P for practice this one and O for other formats before you practice. I am going to show you the other formats regardless. Right? I just want to know which order you want me to take. Show you the other formats first, or you want to practice what you're seeing first. All right. Okay. So I see in the request for practice are a bit ahead. I have one with the others. All right. Cool. No problems. Okay. Cool. So I know not everyone voted. All right. So yeah. So Elijah, I'll show you the other formats in a little bit. Right. Okay. So what I'm gonna do, I send you a pic of this in the chat. Right. Let me pull up the other question that I want you guys to try now, right? So we are going to be doing Milsap, right? So for Milsap, you're going to need the information that we already calculated here, right? Specifically this item and really and truly only the 1525. That's the only piece of information you're going to need from this, right? What you're going to do for Milsap is you are going to be doing the income statement, right? Using this information. So let's just go through it one more time. So you produced 80,000 and we sold 72,000 at 20 per unit. So that's your first line, 72,000 by 20, right? And then after in your cost of goods sold section, cost of sales section, well, we have no opening inventory because they said Milsap began business on Jan 1st. If you began business, that implies you have no opening inventory of finished goods, especially since you are manufacturing, right? You probably have no opening inventory of anything. You might have, it's not impossible, right? But they didn't tell us that, right? But definitely no opening inventory of finished goods, right? So you have your sales, right? So you have so opening inventory is the same zero. The production is 80,000, right? So we said that that's going to be multiplied by the 1525. And then if you sold 72,000 out of the 80, it means you have 8,000 left. 80 minus 72, right? So that's also going to be multiplied by the 1525 and then subtracted, right? Now, right, you're going to subtract that from the sales to get gross profit, and then for your selling expenses, right, the fixed costs, 180, you're plugging in that as a plug and play. Your selling expenses is 20 cents, but that's by $72,000. Sorry, 72,000 units, right? Okay, so I'm going to put this up. Hold on. I'm going to resend this one in the chat too. Right, so that's Milsap. So we're going to put that on top of there. Income statement. Right, have Diablo. Where Milsap then? Oh, why Milsap all the way across here? No, that's not the correct Milsap. Whoa, where Milsap gone? I'll figure it out after. All right. Right, so basically you're doing the income statement following the example in the lower part of the screen, but using the information on the upper part of the screen, right? Okay, so actually just finishing my water here. I'm gonna run up and get some more, all right? Of course, if anybody has any questions as you go along, you're very welcome to ask. You're not under exam conditions, not yet anyway, all right? But of course, you can ask it if I'm not here. So I'm just going to put this in the garbage, run up to something and come back quick. Yeah, I'm here now. Sorry, guys. Yeah, where did he go? I like turtles. Yeah, man, you probably just bumping as I went to get the water. I'm making tea. Sorry, guys. Yeah, yeah. All right, cool. All right, so let's take a look and see. This I don't like this. Yeah, right. Okay, cool. So let's go to where did Milsap unhide? That was to the end. It has Milsap. No, the one Milsap. All right. It is Milsap I want. I am doing Milsap. Is that not Milsap? Yeah, it is Milsap. All right, cool. Could you copy? All right, cool. Let's just change our name, right? So absorption, costing, income statement. Oops, absorption, right? Milsap. Milsap Industries, right? There you go. Industries. Oh, they didn't give us a year. Okay, that's okay. Well, whatever year we use is fine. Right. All right, so we have sales revenue. So we did 72,000 at 20. So let's change that. All right, at $20 each. All right, cost of sales. We have no inventory at that. Production cost, right? So we made 80,000 at 15.25, right? 80,000. Right. Cost of goods available. Inventory at enter. So that was the 80,000 minus the 72,000 at 15.25. Right. So equal to here minus. Right. Okay. Lecture room. Right. Put that away now. Right, so we have a cost of sales of 1,098,000, sales revenue of 440, so that's 342 for gross profit. Right, now we're gonna deal with the selling expenses, right? So 180 is the fixed, and then the variable, right? So we sold 72,000 units at, and it's 20 cents each, right? 14.4. Okay, and let's maximize this now so we can see it a little better. And we'll zoom into about there. Okay, that's a little too much. Cool, right. So that's the Milsap Incorporation. Yeah, I'm here now. Okay, right. So, ladies and gents on my Google Meet, if you guys are good with that, just kindly give me a quick G in the chat. Please and thanks. If you need me to rework, if you have any questions, give me an R. That's not a problem. Right, so that's 6 out of, so somebody jump out. So 6 out of 13. So that's a little less than half. I could actually get 6.5 people. Aha, so right, so that's 7, that's 8. All right. Hey Siri, I see your hand going up there. What's up? Talk to me. How can I help?
So for the period also like administrative expenses, you're not going to be selling or for the man at least.
All right, cool. No problem. Yeah. Yeah, guys, yeah. Asking questions is not a problem. All right, and sometimes in asking them, you end up answering your own question, which is perfectly fine. Because if you didn't ask them, you mightn't, what you call it, be able to answer them. Let me just see what this this interaction was. Nearly. Okay, I don't know what that was. I like turtles. Anyone there? Oh, I guess they went. All right, okay, small thing. Well, they had an interesting interaction there. Right, okay, cool. So what I want to do is I'm going to send a picture of this in the chat. Right, And after this, I'm going to show you guys a couple of alternative formats. So again, they're just recommendations. They are not anything I'm mandating you to learn. If you find that you like them better, you're welcome to use them, right? And of course, it would all depend on the information given to you in the question. Usually you're given enough information to do the traditional kind of income statement. All right, so wait on, let me take a little sip. See how hot did I put this away? Real hot. All right, good. I like that feeling. Yeah, boy. Okay, cool. So I'm gonna go back to my income statement example here, which is the Harris Corporation. Right now, okay, that looks good enough. So I'm going to just kind of copy and paste this piece here. All right. All right. So this is an alternative layout 1. All right, cool. Alt layout 1. Oh, sorry. This was no. All right. Okay, right. So the cost of sales could actually be done in one line. Because what is cost of sales? The cost of sales. So again, what is a very simple concept of profit from your basic CSEC maths? If you sell one item, you would have sold it for a particular price, which we call the selling price. And you would have most likely have bought that item, and the amount you paid for it, we call the cost price. So the difference between the money you make, your selling price, your revenue, and the money you spend, your cost price, selling price minus cost price is profit. So we could actually calculate profit by doing that. Now, what does that have to do with this? Sorry, so the cost of sales. Cost of sales is the cost price. That's the cost price of the sales revenue, right? The cost price of the goods that were sold to earn the 85.5, right? So we sold 9,500 units, and their production cost, as you can see on top of here, is at 4 each. And isn't this 38,000 the same as this item here? Yep. So we just compressed 1, 2, 3, 4 lines into one. Technically 5 into one line, right? It's a lot more efficient. I prefer it when I'm doing my questions, but again, I'm not mandating that you have to do it. And then everything else that follows is actually the exact same, right? So I'm just going to copy and paste that down here. Right? So as you can see, it does look a little shorter, and there's an even shorter way you could do it, which I'll show you real quick. Hold on. As a matter of fact, you know what? I'm going to take this out. And I'm going to do an alt layout 2. And this one, I'm actually going to compress this into one line. So how am I going to do that? Like this, right? So your gross profit, so think about it. You sold how many units? 9,500, right? Your selling price was $9. Your cost price was $4. And you sold 9,500 units. So these two things actually just kind of go away. See, 47.5. So, I mean, the selling and admin stuff do go along with it, right? I mean, I really should show them, but again, this is just to compress, sorry, the cost of goods sold section, right? So, okay, let me actually reread this, right? So alternative, so alt layout 1, compress cost of sales to one line. Right, and then alt layout 2. Compress gross profit to one line. Right, so like I said, it's not that you're just doing this piece and as the whole income statement. That's not what I'm saying. I'm not saying that. I'm saying that basically you could save yourself either the cost of sales section or the whole gross profit section, right? Again, there's no one right way, there's no one right format or one right layout in cost accounting. There are different ones. Usually they're all very valid, right? Unless the question specifically asks you to show a particular item in the statement explicitly. There's no necessity or obligation to do such, right? I mean, obviously, if they want an income statement, you should show the revenue, the expenses, and the difference, right? Again, depends on context, right? So, because technically you could argue, well, so in this line it didn't show your revenue, right? That's true, right? But again, because it's cost accounting, there's no necessity to do so, right? Only it's really up to the discretion of the person who is constructing or preparing the statements, right? There are no standards or rules to follow per se in terms of the presentation. Okay. All right, so guys, so going forward, if you all want to use either of these here to save yourself some time for the top section here, you're perfectly welcome to do so. If you prefer to do everything long ways, that's perfectly fine as well. All right, so just to check, so Haley, were either of these what you were gonna talk about, or is it still something even different than that?
It's the layout.
The second one, yeah. That one is the most efficient of all. Yeah, it saves a lot of time, right? So yeah, so whichever one you guys want to do is perfectly fine by me. All right, so what we're gonna do now is we're gonna do Diablo, but I want to send a picture in the chat, right, of the alternative layouts. So let me just add some colors to them, right? So I'll put this one on a blue. Actually, no, the blue is the other one. All right, so let's do an orange for this one, and let's do a green for this one. Okay. Cool. All right. So what I'm gonna do, let's put back up Diablo. Right. So for Diablo now, you have a selling price of 79. You produce 40,000 units. You sold 37,000 units, right? And you have your other costing data down there. Right. So what I want you to do is I want you to do the income statement using absorption costing, please and thanks, right? So again, you could do it the long way or you could do it one of the shorter ways. Either way is perfectly fine by me. All right. So I'll give you a few minutes to do that. And of course, if you have any questions, please feel free to WhatsApp me. You could also send me pics of your stuff. KSIC Center Rose, thanks very much. Little crown, what's a little crown? Okay, cool. Thanks, Jada. Let's put that there. So we're doing who? Diablo. Right. No, where's Diablo? Harris, right? Hold on. How we are Harris? Oh no, I had copy and paste. Oh, right. Okay, cool. Turbo. Okay, cool. No, so we're doing Diablo. Just apparently don't have Diablo in the examples last year. What's going on with this thing? Oh, okay, right. I have that there. I have that there. So yeah, all right. That's one thing. Milsap, Turbo. Right, we'll do Turbo after. Yeah, Turbo will be like a kind of full service thing where you have to find the cost per unit first, right? And after Turbo, if we have time, I actually will probably introduce you all to the variable costing income statement, just as a as a preamble to next week, right? Oh crap. Hey, should I go back? Sorry about that. Okay, what is going on with this camera thing, bro? I don't understand. Why does it pull? Why does it try to pull that? That don't make no kind of sense. No. I wonder, boy. Alright, well, that seems to be working. Oh, yes, sorry. Alright, so I'll give you about a minute and a half again. If you need longer, you can let me know. Okay. Okay. Oh, hey Perry. I see you come back. So you and I like Tittles wanted we were having an interesting conversation just now. Thanks, Jada. Okay, shall we? So let's put that up. Let's put this down. Right, so that's the information we need. Okay, cool. So income statement Diablo. Why does it say turbo? So turbo's across here, so I did turbo. Okay, cool. Okay. I probably just labeled it incorrectly. So this was E26 13, and that was Diablo systems. Right, so let's do Diablo. Diablo systems. Now. Right, so goes to 19x6. Okay. So I'm gonna do one of these shorter ways. Oh, hey Naomi. Yeah, no problem. It happens. Don't worry. It had a time I had my laptop plugged in, right? I plugged this thing into the back, and I going on. I hear beep. What's that noise? Beep. What's going on here? And I happened to see a light blinking on this side with the streaming laptop. Yeah? I plugged in the thing to the back, the charger to the laptop, but not to the wall. Well, the UPS. So yeah, if it was like 2 seconds later, the whole thing would have gone down and the light would have crashed. So yeah, gotta make sure, always make sure things are plugged in where they should be. But that's alright. Okay, so Diablo. Okay, so let's do. So I'm gonna show you sales, right? So sales, you have 37,000 units, right? Oh, right. At what was the selling price? $79, right? So 79 each. Right, so that's equal to 37,000 by 79. Right, 29, 23, right. And then we have less cost of sales. So we sold 37,000 units at, what was the price in 26? It's 26.13, right? No, that's Milsap. It was 14. Okay. Oh, it's 18. Crap. Yeah, it's just 18, right? 18 each. Wow, that's a big gross profit, boy. $61, yeah, boy. Okay, cool. So that's equal to 37 multiplied by 18. Oh, that's why they call it Diablo. Okay, cool. Right, so that is our gross profit. Right, less the selling and administrative expenses. Okay, cool. Right, so we have the fixed and we have the variable. Right, so the fixed one, that's just a plug and play figure. Right, so that is, where'd it go? Right, 207,200. And the variable is 22 per unit, right? So we sold 37,000, right? So 37,000 units at 22 each. Ooh, that's a lot more. Wow. Okay. So we're gonna pull that across here. Put a little line there. Sorry, question? Oh no. Okay. So that's yeah. So 1.235. So that there is our our net income or operating income. Right. So let's hold on one sec. Did I send a pic of that in the chart? Oh, okay, I see phone right next to me. I got something and no notification came. All right, so we're going back with Diablo. And this one, let's maximize the thing. I think it was, I didn't take the picture. That's all right. Okay, cool. All right, so can I get a quick G in the chat if you guys are good with the solution on the screen, please? And thanks. Right, if you need me to rework or re-explain anything, I'm happy to do so. Just give me an R any question. Okay, so 8 out of 12, not bad. You lost? Okay.
I did it the annual, not this year, because I can't get this year understand.
All right. Hold on. When you say the other way, you're talking about the with opening inventory.
Yes.
Okay. All right. I'm gonna do it that way. All right. Give me 1 sec. I'm just going to copy and paste the format that I will use. All right. Yeah. Actually, no. That's my bad. I was supposed to ask if anybody did it the original way and do it that way. Oh. Okay. All right. So that one time. Right. So let's take this one here. Right. I'm gonna put that. I need some dollar signs. Right. Cool. Okay. Cool. Right. So Diablo. So it was how many? It was 37 at 70. Okay, cool. So 37. Let's change this to 37 at 70. So 37 at 79. Right. So inventory at 7. Right. So production cost. So we made 40,000, right? And the variable cost per unit was 18. Right, so equal to 40 by 18. All right, and then the inventory at N was 3,000. So that was 40 minus the 37 at the same 18, right? So that is equal to minus 3, 18. Right. So 29, 23 minus the 666 is that. And then here I'll just copy and paste these two figures here just to save some time. All right, cool. Okay, 1235A, 1235. Okay, all right. Keisha, is this a little more along the lines of what you had? And are you okay with it?
Yes.
All right, cool. All right, lovely. Cool, all right. So folks, I think we have time for one more question. So that's where Turbo comes into play. So give me 1 sec, let me pull up Turbo on the screen. Turbo, all right. So the following information pertains to Turbo Enterprises for the year ended December 31st, 19X8. So you have a variable cost per unit, direct material 6, direct labor 4, factory overhead 9, selling and admin 3. So they threw this in there to kind of, all right. Annual fixed costs, okay, factory overhead 600,000, selling and admin 115. That's admin, okay. Other data, so we sold 21,000, but we had 25,000, we produced 25. And look, we had inventory at start. All right. So no, sorry, hold on. No, 12/31st X8. So that's December 31st. That's the end of the year. Okay. So we sold 21, we made 25, and we had 11. Right. That means your opening inventory is, hold on, No, just now. Sales and inventory, that's 42. So that's 17. That don't make sense. Opening stock plus production is equal to that. No, sorry, it's 32. Okay, so it's 7. All right, cool. Right, so your opening inventory is 7,000. But in a case like that, if they didn't give it to you and you're not sure how to calculate it, it might be in your best interest to use one of these shorter formats, because we know how many we sold. All right, so folks, when you're doing so you don't have to do a you do have to do a calculation of the cost per unit, right? So we know for the variable, it'll only be these 3. And then down here, you're going to have to take your 600 and divide it by 25 to find the fixed factory overhead per unit. So let's start there. So the first thing I want you to do is I want you to do up a calculation of the absorption cost. Sorry, I want you to do both. I want you to do the variable cost per unit. So basically what we did for like, what happened here? Yeah, so basically I want you to do this, right, for this information here. All right, so let's start there real quick. So let's put that up to the top there. We put this one down below. Let us zoom out a little bit, boy. Because we need to see how many units we made. All right, hold on. Yeah, we don't need that information. So I could pull that down a little more now. Yeah. Okay. Right. Okay. Yeah. So I wanted to do the calculation of the cost per unit under both variable and absorption costing. And I wanted to then do the income statement under absorption costing. So I know the time might run out depending on the method you're using. So I'll do a copy and paste and do both methods, right? We could go a little past 12 if you're all able to do so. If you can't and you have to leave at 12, it's not a problem, right? You do what you need to do. Sorry, yes. Yes, Keisha, talk to me. What's up? How can I help?
First, this is doing the absorption costing system, right?
Yeah.
Why in West we use the production cost per unit as absorption costing, but Diablo we did it as variable costing, which we use the
Oh, you mean in Diablo?
Yeah,
Oh,
which is 48.
it's 48. Oh,
Yeah.
wow. Okay.
So that's what I get distracted just now.
Oh, okay. Wow, that's a good pickup. I did not even realize that. Thank you very much, Keisha. Ooh, okay. Yeah, so let's try that again. Here, not just there. 125.8. Yeah. Wow. Okay. That's my bad. Yeah, guys. Right. So, okay. Let's fix that. Okay. Take that out. Yes, because we did Diablo and it was 48. Thank you, Keisha. So you guys paid to be observant. Okay. All right. So okay. So let's see if we can at least get the absorption, sorry, the costing thing down here with these this question from these, right? Yeah. Wow. Look at right there. Diablo 48. Wow. Okay, so you're doing first. So this question is called Turbo Enterprises. Turbo, yeah, Turbo. And again, so you're doing the calculation of the cost per unit under variable and absorption. We'll correct that shortly. If we have time, we will do the income statement. If not, what I'll have you do is do the income statement and send it to me, right, on WhatsApp, and I'll send a solution. Right, okay, because I think I do have to stop at 12 because I have to help with something. But yeah, but we'll definitely do the turbo one. I'll send that. I'll send it up with the PDF as well. Oh, I forget about that. Yeah, I think I have to do that. Cool. I get this to D. All right. Calculation, yes. Cost per unit under variable and absorption costing. Okay, cool. So we know we have our usual components, of course. So direct materials, direct labor, variable overhead, factory overhead, and then fixed factory overhead. Right, which we know is not present under variable costing. Okay, so direct materials is 6. Hold on, just now. Yeah. Direct labor is 4. Variable overhead is 9. Right, so we're going to add that up at $19 per unit under variable costing. Right, and then for absorption costing, so again, it's the same exact thing. The fixed overhead, right, so we're going to take the 600,000 units. So you produce you have $600,000 worth of fixed factory overhead, and we are going to divide that by the number of units produced. All right, so I think that's is it 24? Right, so look at that. That's a whole $24 more per unit. All right, okay, cool. All right, okay, so we just at 12 there. So I don't know if you guys. All right, so look, I'll let you all vote. Right, if you guys want to stay and try it, give me a S in the chat. If you want to finish, well, if you want to leave, give me a L. So stay or leave to do the income statement. Right, I only have like 5-7 minutes to spare anyway you take it. So you're gonna probably have to do it real quick. Right. If you want to leave, cool. If you want to stay, no problem. I don't want to rob you of the chance to do it. So just give me a quick S or L. Stay. All right, cool. Okay. So those who want to stay, go ahead. Those who have to leave, not a problem. If you have to go, if you have other lessons to go to, other things to do, no problem. You do your thing. Right? So, okay. No problems. Yeah, I understand. Yeah. Okay, later. Yeah. All right. So those who stay in, like I said, I only have about 5 or 7 minutes. So if you could do the income statement as quickly as possible, right? I will actually just copy and paste the format and make sure that I also stay within my time. Yeah. Okay, guys. So guys, so go ahead, and then we'll go from there. We'll end. Yeah, go ahead, and then we'll call it a day. And we will use the correct costing, 43 per unit. Right. 156. Okay. Cool. No problem. That's fine.
First, you are selling price for these sales because I'm not seeing any.
Sorry. Let me actually maximize this and take out that item here. Selling price is 62. Sorry about that. wish I didn't. Could I do a left and right split? I think I could do a left and right split. Let me try that. Okay, cool. I could even push that back a little bit. Take it down to 125. That, yeah, that is quite visible. Cool. Yeah, okay, I'll leave that piece there. Okay, cool. So let's do this. Turbo. Income statement. Yeah, okay. So no. All right. I know I should have made this, what you call it, dynamic. Anyhow, didn't do that, so instead of take my time and get through it. Right, so we're talking about Turbo Enterprises. Enterprises, income statement and absorption, 19x8. Okay, cool. Right, so we sold 21,000 at 62. 21 at 62. Right. Cost of sales, so same thing, we sold 21,000 and it's absorption costing, so we're using the 43. Right, right, selling and admin, the fixed selling and admin is 115 and the variable, right, so we sold 21,000 and it's $3 per unit, right? So that's equal to 178, right? And in case anybody did it the other way, slightly longer way, again, nothing wrong with that. If that's what your brain is liking, right? So we'll do right. Okay. Sales revenue. Production. So we produced, how many we produced? We produced 25,000, right? 25,000 at 43, right? $10.75, and we right, so they gave us that we have 11,000 units at 43, right? 602, all right, and then cost of sales is 6. Oh, we are 602. At 43, 25,000 at 43. Oh, we had an opening stock. That's what. We said it was 7,000 units at 43 each. Aha! Right. Wow. Yeah. So you see, when you have your opening stock, you have to remember to put it in. Right. Good. Okay. Cool. Wow. Okay. So, folks, as you can see, the operating income or net income, right? It's the same whichever way you do it, right? So, hopefully you're good with that. If not, you could let me know. You could send me a pic of your work, right? All right, so folks, I had a cut and run now. I will send a link to the replay and the PDFs of all the stuff we did today in the chat, right? Next week, we are going to tackle the variable costing side of it, the marginal costing side, as in the income statements. And we're going to do them for these same questions, and we're going to see that the net incomes are not going to be the same. And again, that's because of how we treat the fixed overheads under both methods, all right? Sorry, the fixed overheads of production, not these. The fixed selling and admin is treated the same regardless, right? Yeah, and then the following week, I think, will be the reconciliation statements. And then that's it for variable and absorption. And then we're on to module 3, which should take us, so yeah, March. So I think CVP is maybe 1 or 2 days budgeting. I've compressed to 2 days, although I wanted to spend 4. We just don't have 4. So that's 4 days in total there. Variances, I think I take 2 or 3, and then we finish off with capital budgeting, which is the next 3. So it's 10 days, boy. That's 2.5 months. So March, April, and piece of May. Well, in April, we're also going to increase the number of sessions because we'll be on Easter break. So I'll see if we can increase it. So there may be a small uptick in the fees, but again, I'll try to keep it the same just because, I mean, I'm not trying to milk money out of you all. It's for a good cause. Anyhow, so folks, that's about it for today. If anybody has any questions, please feel free to WhatsApp me. Other than that, have a good weekend. I'll see you next week. Bye. All right, later. Bye-bye. All right. Hey, Furious Flames. I do give up my WhatsApp on lives. You could DM me and I could give it to you there, or you could email me and I'll give it to you there. All right.